Hi guys, welcome back to Swero TV. I'm Laura Bakbata, your host with the most. So guys, today we are continuing with basic accounting for business leaders, interpretation of financial statements. If you remember the previous episode, we actually talked about I don't know, what did we talk about the cost of sales, right? No, we talked about expenses. Yes, the previous episode we talked about expenses and actually how you reach your net profit. And on that episode, I actually mentioned that we are going to be talking about margins. How can you set margins on the product or the service that you're actually selling? And what does it mean when we say margins? And how can you calculate your margins? This is what we're going to be talking about today, all right? So the very first step that I want us to get into is that just a disclaimer, this information is actually meant for business leaders. It's not meant for you to use for you to think you can actually calculate your own accounting yourself. You still need a proper accountant to do your books for you. This is just the basic necessities for business leaders to actually understand what we are doing when we are busy telling you what we have produced for you as what we call financial statements or management accounts, right? So today we're going to be talking about margins. How can you set margins for your business? And what are margins? Margins is just basically your markup that you have put on your sale or on your product or your service when you're actually selling it. How can one calculate their margins, and how can you know that whether you have a good margin or not when you are actually doing your sales or when you're actually selling your product or services, right? First of all, there are three different types of margins that you can actually have. There's what you call gross profit margin. We've talked about gross profit, I think, on the other episode. Just check the YouTube channel on Swero TV. You will actually see the other episodes talking about gross profit and cost of sales. So basically, gross profit margin, there's what you call a gross profit margin, there's operating profit margin, and as well as net profit margin. But today we're going to focus on gross profit margin and net profit margin because that is the one that will normally affect most businesses. All right, so the very first thing that I want to talk about is gross profit margin. What is gross profit margin? Remember, we talked about what is gross profit in the first place. Gross profit is just your sales minus your cost of sales. What are your cost of sales? Your cost of sales is the cost of the product that you're actually selling. The direct costs, not necessarily the rental, but the direct cost of the product that you are actually selling, right? For instance, if you are actually selling food, would be your suppliers. How much do they charge you for the food that you are actually buying, right? For instance, if you're selling bride meat, how much does it actually cost me to buy this bride meat and to end up being the way it is, nicely marinated? So that'll be probably your marinade and the cost of the meat itself from your supplier, right? So for instance, if your meat costs 100 pula, right, and then you decide, okay, I am going to sell it for 120 pula, right? And this will be your sales, and then you say, I'm gonna sell it for 120 pula, and then your cost of sale will be 20 pula. All right, it will be 100 pula, right? So it will be done. Now that we're going to now subtract the sales, which is 120 minus 100, which is minus 100, which will be the cost of sales, and then that will give you the gross profit. Now, how can we calculate the gross profit margin? The gross profit margin is just basically your gross profit divided by the revenue times 100, and then that will give you a percentage of where you are sitting with your percentage, and you will actually be able to see, well, okay, no, the percentage is low or the percentage is high. I will get into that where you will know whether your margins are too low or your margins are too high. You will also look at your profit, if it actually looks good. If it doesn't look good, you will also be able to tell whether you need to increase your prices or you need to find another supplier who is cheaper, right? And then we also now get into how the net profit margin. How can you calculate the net profit margin? What is net profit? Net profit is basically the gross profit minus the expenses, other expenses that you are actually going to incur, such as fixed expenses, such as rental, such as if other fixed expenses such as rental, such as salaries, as well as maybe you might have lighting, the cost of lighting, how much would that cost? Now you will have what you call your net profit. Now there's what you call as well a net profit margin. What are you actually now selling your products? Then you need to also remember, okay, fine, this is the cost that actually has costed me the product. You also need to remember there are other expenses when you are actually selling your product, so that you make good profit from it. And then how do you see that you are making good profit from it? By actually checking your calculation of margins on it, right? How do you calculate the margins after you have incurred all your expenses? It's actually just revenue divided by, no, it's not revenue, it's net income. The net income, the profits that you've made after you've done everything, divided by the revenue, all right, that you've actually gotten there, times 100. Then you will see the percentage where you're looking at, okay, this is how my margins are looking. All right, it will actually then happen. How can you actually now know whether this is a good profit margin or this is a not so good profit margin? How do you know that? It varies from company to company, from industry to industry as well. But the rule of thumb is that 10% net profit margin is actually considered average. That's just the rule of thumb. Also remember, like I said, it depends from industry to industry, from company to company. It depends on a lot of factors as well, right? And then 20% profit margin, that is when that is considered high or good. All right, and this is when you realize, after you've calculated using those percentages that I was actually, those formulas that I was actually telling you just now, when you use those formulas, you'll know, okay, 20% is good, 10% is average, and then 5% the margins are low. All right, so that's how you actually now get to calculate whether, what do I need to do. So what can you do to increase your margins? And these are actually many factors. It could be that maybe your cost of sales is too high, or your expenses are too high, or your sales have reduced. Many factors in place that you need to look into and actually analyze. You see, when you're a business person, you need to analyze every single thing, of course with the help of your accountant, to analyze every single thing. Okay, Loroto, why are my profits going? How are my margins looking? All right, this is where it starts. You start, how are my sales looking? Have my sales gone down? Why have my sales gone down? Could it be maybe people, I don't know, maybe it's seasonal, maybe your product or service is seasonal, right? Could it be maybe I'm giving a really bad customer service, competition has come in? It could be really many factors that you need to check out. And may I stress that you need to check every single thing, including your customer service. Is your customer service good? Is your customer service exceptional for customers to keep coming back as well? Get feedback from your customers. Try and make that kind of relationship with your customers for you to actually find out why your sales are dropping. All right, so there could be many factors, but you need to make your research and find out. This is why it's important to know every single month how you are doing financially as a business. Get an accountant. I would really recommend that you get an accountant. Don't just run a business like you're just running any, I don't know, you know what I mean, like you're not running a proper business. So that you can create wealth for your family and yourself, you need to run it properly and ensure that you hire an accountant that can help you calculate these things, so that you're able to see how you're looking every month. This is why there's a need for it. Okay, this is what we're here for, but you can also hire one internally. There are many other accounting firms out there that can help you. All right. Okay, so now that you've considered why could be, like I was telling you, research why the sales are low, many factors as well. Now why another factor that could also be there, could be that your costs are too high, right? Look at your cost of sales. Why are your cost of sales high? Because if your cost of sales are high, that means your revenue, your gross profit is going to go down, right? Why are your cost of sales high? Maybe your supplier is too expensive, right? So those are the kind of things that you need to check. Or maybe you can find a cheaper supplier, or negotiate with the supplier that you get more products so that you can get a cheaper cost. Now, why is your net profit margin low? That's another thing that you need to check. You need to check your costs. Maybe your rental is too high. maybe, I don't know, maybe your marketing costs are too high or whatever. You just need to check why your costs are so high for you to actually reduce them, and then you can have better margins and better profits for your business. So you need us to go into detail for this. Give me a shout. There is an upcoming masterclass that I want to have for business leaders or upcoming business leaders on how to set margins, how to look at how to calculate things, so that you actually get to understand what your accountant is doing, and not just look at them and you don't even know what they're actually doing, an interpretation of your financial statements, so that you can be able to also ask questions, right? We'll be announcing the date soon, so look out for that. We are BQ accredited, so you should be able to get your money back if you are actually paying VAT or paying training levy. All right, so this is it for today. I will be continuing with the recordings as well of interpretation of financial statements, as well as another one that I'm doing concurrently with this one. This is the what can you do during, this is now regarding your personal finances. What can you do to actually separate? What can you do now when your income has been impacted, or you've lost your income? I've already made a recording about that. Now we're going to be recording very soon about how when your income is impacted. That episode is coming. All right, thank you and have a good week ahead of you. Bye for now.